Hi, it is April the 4th, 2025. I recorded a video and posted it on here a couple days ago when the futures were selling off. I was talking about the bond market, how fools were flooding into the bond market, and they are continuing to do so as the markets continue to sell off. Trump's out here begging the Fed lower rates, but the Fed's saying correctly that tariffs are an inflationary policy. Well, per the Fed's mandate, they're supposed to not allow inflation to get out of control. And so they're saying no rate cuts. Now, politically, I think they're trying to protect themselves because right now Trump's getting all the blame for all the market carnage because it's happened in response to these tariffs. And so I think the Fed's happy to just kind of duck out of the way and let Trump take the fall, as so to speak. But the Fed's wrong if they think they can save the US dollar by not raising rates, because the US dollar is falling, and it's been falling this last couple of days. It's gotten under 147 yen, but it's been falling against other currencies as a whole. And the reason it's falling, the people in economics, the public seems to very often fail to realize that there are two parties to a trade and that governments hurt both parties to that trade. There are various instances we can look at where these sorts of fallacies show up, and it seems like people want to try to state the position that they see as promoting their political philosophy the most, where in reality it's important to acknowledge that policies hurt both sides, to look at that reality. An example of this is trade tariffs. All the Trumpers are saying, well, it's just the foreign producers are going to pay that. The left is all saying, no, the consumers are going to pay that. Well, the truth is both parties are going to be hurt by this policy. Consumers are going to be hurt because now they're going to have to buy more expensive stuff that's either got a tariff slapped on it or they're buying from a domestic producer who can now raise their price because foreign goods have become more expensive. So they're going to be hurt, but the foreign producer who was shipping to America also now they got to find whoever their next best customer is. So when they had the option to ship to America, they were doing that because that was what made them the most profit and made the most sense. Now they're going to have to choose their next best option. So it does hurt both sides. The same is true of all transactional taxes. I mean, if I'm working for someone and paying an income tax, it's hurting me, it's hurting my employer. It's hurting both of us. We're sharing that cost, and the way we share it is based on the elasticity that each of us has, willing to change our behavior in response to that tax. And sometimes, taxes are making it so that no more transactions are possible, and you're getting supply side destruction, which is bad for the global economy. This is another fallacy I see, is people wanting other people to suffer as if like there's this one pie and that if China gets a better deal, that means we get a worse deal. And that's just not how trade works. That's not how economics works. People engage in trades when both parties to that trade perceive a benefit from engaging in that trade. It's about win-win agreements. And we should be rooting for other countries to succeed. The more productive China is, the more cheap stuff we can buy from them. That benefits us, having that option to do that. However, now our currency is failing, so we're going to be able to buy a lot less stuff if we're using dollars to pay for it. So the dollar is going to collapse. both because of supply and demand. And it doesn't matter what the Fed does, because the Fed's already done so much. The Fed has already printed trillions of dollars to buy assets that remain on its balance sheet. So all this money's already being created. It's already sloshing around the economy. And they've empowered government by allowing government to borrow more. It's allowed government to become more powerful, and that government has thus had a greater control over the economy. And so they've destroyed production. And so, like I said, dollars, the price of the dollar in relation to other currencies is based on both supply and demand for dollars. So they've created a supply of dollars and they've destroyed the demand for dollars, because people in America, the government has destroyed production. So we don't produce enough good stuff that we can export, that people are willing to pay us for, and have to use dollars to buy it. The only things people have wanted to buy with dollars are financial assets, stocks. Sure, if the stock market is booming, the American stock market, sure, people buy that. But now that's going away. So now they're taking those dollars and they're selling that stock, and they're transferring those dollars into a medium that they prefer, such as a foreign currency. So what's going to happen is inflation's going to get really bad. And it might be 10%, it might be 20%, it might be 30%. And I'm talking about like when the April print comes out, because these tariffs are not going to take long to have an impact on inflation. We have a just-in-time delivery economy where the things you're buying today only just got shipped into the country, within the last couple of weeks probably. So within 2-3 weeks, you're going to see pretty much the full impact of these tariffs on prices, and you're going to see a massive price spike. Well, bond analysts, and not all of them are human, some are computers, they're going to price inflation prints into their valuation of long-term bonds. A fixed payment like a bond in dollars has less value if inflation is high. And so even though there's this knee-jerk response where all these money managers are fleeing into bonds because they see them as a safe haven, they're going to realize they're not a safe haven against a dollar devaluation, which is what we are experiencing and what we're going to continue to experience. So eventually, the safe haven becomes gold. And that's where all that money goes. So the dollar is doomed. And I've told you this. I've told you the dollar and I've told you the bond market are both doomed. People have made a mistake thinking the Fed can choose between losing one or the other. They can't save either. If the Fed tries to save the bond market, if they reverse course, if they come in and they buy bonds and they print more money, well, now they're going to collapse the dollar even faster. And all that same math applies to the bond market. And so people are going to sell bonds. So this is where we are. And you got an opportunity this weekend to load up on metals if there's something you're interested in, and you're interested in having some capital once the dollar becomes worthless and capital is highly in demand. So I guess that's it. I got 3 views on my last video, so it sounds like not many people have gained much interest in hearing what I have to say. But what I'm telling you is right, and if you don't act right, you're going to lose a lot. Now, people, I don't know. I don't know why people aren't interested. I guess it's just inconvenient. I guess I just support things that they've already written off, that they believe they've considered, they believe they've thought through, and they haven't. They haven't listened. They haven't gained empathy. They haven't learned the major lesson I learned in 2017 that I talked about in my book, and that I'll talk about again in my second edition, that it's important to listen to everyone, to understand why they believe what they believe, that it's compassionate, that compassion is important, and that it can improve your own knowledge, uh, to help you achieve your own ends. So, it's a lesson people are gonna have to learn real quick. Um, and then they're gonna have to find my channel and buy some fucking gold while they can.